China's latest quarterly growth figures are out and they're better than expected. The economy grew 4.5% year-on-year between January and March. The rise was driven by strong exports and a rebound in retail consumption after authorities lifted most pandemic restrictions. Unveiling the figures, China's official statistics bureau described them as a good start, but said the foundation for economic recovery was not solid yet. Now, to break this all down for us, let's bring in our China expert, Clifford Coonan. Clifford, good to have you with us. It's interesting to hear China's own official statistics bureau saying the recovery is not on solid ground. What are the weaknesses they're pointing to there?
Well, I think they tend to chalk up the figures, as you mentioned, so the fact that they do indicate weakness is significant. I think what you're seeing on the plus side, you're seeing that there's a post-COVID bounce happening. People are going out to eat again. People are going to the shops again. They're buying. Retail is up. But the weaknesses we're seeing are things like cars. They're still weak. And I think the big challenge for the Chinese economy is going to be external factors. The fact that the global economy is still weak and China is still very heavily dependent on external factors. So we also have issues like youth unemployment, which shows that people aren't hiring yet. And a lot of the growth is coming through credit creation, which means that we could be looking at debt problems down the road. So it's a very mixed picture, even if the headline figure is more positive than expected. Right, so a huge number of structural issues there. But at the same time, the figures are better than analysts had been expecting. How do you square that? Well, I think basically what we're seeing is, first of all, the fact that last year was dire. It was really, really bad. The economy was shrinking. No one was going out. And so I think we're also seeing that April is looking good, and we're going to see quarterly growth in the second quarter is also looking quite good. Some economists are looking as high as 6 or 7% growth in that. But the problem is still going to be things like investment. We still need to see a proper retail rebound, and we need to see the property market really take off. And once those things kick in, I think then you'll have a clearer picture of how the economy is going to go. OK, so Clifford, stay with us for a minute because I'm going to come back to you. Because Europe has also been reassessing its economic relationship with China, both in the wake of the pandemic and because of Beijing's refusal to condemn Russia's war in Ukraine. Our reporter Mathis Richtmann is at the Hanover Trade Show, and he's asked people there if they think European companies have become too reliant on China. Here's what they had to say.
It would be smart to manufacture more in Europe. That would shorten delivery routes, which would also be good for the climate.
Corona showed our dependence. The supply chains collapsed, and that was that.
I would say not really. In the last few years, less than 10 years ago, in my opinion.
Where did you see this shift?
The shift after the COVID, in my opinion, and Chinese increasing technology, they are also increasing costs. So the gap is a bit lower than 10 years ago.
OK, so some mixed views there. Clifford, you have been watching China for many years. Have you seen a difference in how European businesses are viewing the country?
Well, I think what's really interesting about some of these remarks, and we've seen it generally, is that there's a big difference between what small and medium-sized enterprises, the Mittelstand in Germany, for example, thinks about the China market and what the big companies like VW and Siemens and BASF think about the Chinese economy. And I think what we're seeing is there's a more realistic approach among the Mittelstand. They're worried about their technology being stolen. They're worried about competition. They're worrying about being priced out of the market. Whereas the big companies are investing. We had a huge billion-dollar investment today by VW in China. So in many ways, there's sort of the gap between the geopolitical realities and the economic realities seems to be getting wider and wider. Things haven't really changed that much among the big companies. And no one's asking the question, what will they do if China invades Taiwan, or if there's another crackdown in Xinjiang, or if there's more aggression in the South China Sea. All of these issues, which could make the China market extremely difficult for companies from Europe, a bit like we saw with European companies operating in Russia. Nobody seems to be asking these questions, particularly among the bigger companies, although as some of these remarks showed, that the smaller companies are more aware, I think, of the economic realities.
That's an interesting discrepancy there, isn't it? Clifford Coonan, thank you so much for your insights. And Europe's relationship with China has also been a topic of debate at the European Parliament today. Here's how European Commission President Ursula von der Leyen assessed the current status.
This international and economic status, as well as our own interests, make it all the more important for Europe to manage its relations with China. And for me, that also shows that decoupling is clearly not viable, desirable, or even practical for Europe. But as I said back in January, and as I set out in more detail a few weeks ago, there is clearly a need for Europe to work on de-risking some important and sensitive parts of our relationship.
Now let's find out what that means in concrete terms. DW correspondent Lucia Schulten has been following that debate closely. Lucia, what is the difference between de-risking and decoupling a relationship?
Yes, hi. So decoupling means eventually ending a relationship, whereas de-risking means managing the relationship, as we have already heard from Ursula von der Leyen herself. So what she means with that is in a nutshell, getting more independent from China in certain areas, such as when it comes to raw materials, but also to protect better critical infrastructures. She mentioned today in the European Parliament that it has to be avoided that certain technologies, certain expertise of European companies would be used by a systemic rival. So this is all a discussion that is going on, how to de-risk this relationship. And she has been pointing out certain ideas here. She's also been mentioning a tool to better protect critical infrastructure. And this is what they mean when they talk about de-risking.
And Lucia, EU countries have different individual relationships with China. Do you get a sense that there's any real unity on how to deal with China on an economic level?
Yes, you have to differentiate between foreign policy and trade policy. So when it comes to foreign policy, it is really up to the member states to a certain point what they do in their relationship with China. And then there's trade policy. In the trade policy, it is a competence of the European Union. So there is also this call today of Ursula von der Leyen to really be united in the strategy against China. And I understood this call also as a call to the EU institutions, as she was talking here in the EU Parliament, but also to the EU member states. She said that it has to be avoided that China conquers and divides the European Union. I've been speaking to an analyst before, and he said that all EU member states would agree on the fact that they have to de-risk, but the way how to get there, that is something they have not yet found their common way.
All right, Lucia Schulten, thank you so much.